One thing I will say on the market right now is take a look at this resistance. It's not impossible to see that when we started this high and you connected the dots, that we hit resistance yesterday. So the bears have at least taken a bit of control in the short term. Part of me is a little bit happy to see, I mean, not super happy, make that clear, but part of me is a little bit happy to see that pre-Fed, the market is not already sitting at the pullback levels that I'm going after. So if we go to SPX, for example, this low right here is a pretty good pullback zone. Okay, this gap and these support levels here is a pretty good pullback zone. So I think the important thing for these next couple of days, or even getting through the price action this week in the near term, is if you take this down to a 1 hour chart. Look, the bears have clearly clawed down to some pretty ugly corrections, right? We had a 10+% correction in the S&P, a 13 to 14% correction in the NASDAQ. It kind of rivaled what we saw back in August with that little, sell-off from the weekend. It was like August 2nd through the 5th. It was it was August 2nd through the 5th. It was a Friday through Monday, but it was really the Thursday to Monday was when things got really crazy over the weekend. Anyway, point is, I don't think this low is necessarily in, nor do I think this low is necessarily safe. But I think at least in the near term, with some of the extremes we've seen in sentiment readings, there's at least a bit of defense in here where the bears aren't clawing as hard and as aggressively. This short-term relief rally certainly felt pretty good. I just think that coming into the Fed on Wednesday, look, the Fed isn't going to cut rates in March. It's not an emergency cut. I don't think that their plan for 2025 would be to do anything that's emergency. I think the Fed is still planning on cutting this year. I think we'll see that in Powell's comments, whether it's explicit or not. But the data is pointing that inflation is improving. The watch tool still shows and suggests there's going to be 2 to 3 cuts this year. So right now, I mean, I'm sure my boy Charlie Bolello's probably like, tomorrow's news today, Fed's going to pause. Well, obviously a 99% probability it's probably the case. But you go to, what are they doing in May? Right now, May is an 80.5% probability that they remain paused. So unless they say something tomorrow that shifts this probability earlier, maybe they cut in May. Now, what does the market do to that to respond with it? I don't know, right? But right now it's forecasted for a June cut and then a September cut. And what's interesting is I don't see a third cut on the horizon except into 2026. So right now this is forecasting 2 cuts through the rest of the year. Could that change? Yep, all this can change. I took a screenshot of this and we'll compare this again on Wednesday. So if I go to the Fed watch tool on the 11th, so March 11th, 11:14 a.m. Well, this is different. CPI, PPI changed. Nope, it changed a little bit, but now we have more of a pause going into May. This is 53.9% for May, and currently it shows 80.5. So that pause is more sustained. Again, does that change this week with the commentary on Wednesday? Maybe. But price action wise, expect there to be some noise at these lows. Listen to a couple interesting macro podcasts yesterday, and look, I think the biggest concern is that we are seeing a pretty aggressive rotation out of the U.S. right now, and here is evidence of that. I pulled this from Praetorian Capital, which is Harris Kupperman. I followed him for a little bit. I don't even know what kind of investor you'd call him. He's just very non-correlated. He's just like a deep value investor. But he is in like a bunch of non-US and mostly commodities. He's been in the energy space, uranium for a while. But I'll just show you this image. This is a bunch of non-US assets. A Poland ETF is up 36% year to date. Austria ETF up 25.7 year to date. China large cap ETF, that's FXI. That's been a stock I've been in, or an ETF I've been in since last year. Had a big rip in September and still following through up 23% year to date. We've got Greece, Spain, Germany, Colombia, Chile, Italy, Sweden, Finland, all 20+% year to date.
If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses and much more.